little more than a half hour to go till the first opening bell of the week on Wall Street. Joining us right now in the markets is Sylvia Jablonski, Defiance ETF CEO, CIO, and its co-founder. And Sylvia, there's been a lot of volatility that's kind of been added back in relative to what we've been seeing in the weeks and months leading up to this. How are you feeling about things right now? Big gains for the Dow on Friday, and it looks like some big upside for the futures across the board this morning.
Good morning, Becky. Well, I think last week was a little bit of an overdone reaction to what we saw coming out of Alphabet and Tesla earnings. A lot of investors panicked, and we quickly saw volatility come back into the markets when we saw this mass sell-off and NASDAQ down 5%, most of the indices off. So volatility is back, but I think here we are a couple of days later, and we see a little bit of a reset because we're back to thinking about the Fed, and perhaps that the Fed put will be in play. Interest rates coming down is better across the board, not only for small caps, but for all companies. And I think we woke up and realized that, hey, looking at your last segment about AI in the Olympics, it's not going away. It's just going to take a little bit of time, and they have to spend some money to get there. And so I think stability has come back into the markets. I'm bullish. I've been buying on these tech dips. I like when they come into play and dollar cost average and hold these, potential names for a long time.
Does that mean that you are betting the rest of these big cap tech companies are going to have strong earnings, or you just think that even if they disappoint with their earnings, it won't matter because we'll be so focused on Jay Powell?
Well, I do think that they have to deliver, right? So I think if we get any kind of, any more noise about lots of CapEx increases and not enough growth in revenues and not enough, projected forward forecasts on the growth of AI revenues, then I think the market will pull back. We saw it with Alphabet, and so that's the big risk. I think the Fed will help because we probably will get some rhetoric around the next meeting will potentially be a rate cut, or September could potentially be a rate cut. So that'll be favorable for markets. But 100% this tech earnings season matters. However, in the long term, I would argue that it really doesn't matter. And if these names pull back, again, I'm definitely going to be a buyer on those dips. I think that they're in the infancy stages of AI innovation, great balance sheets. These companies are kind of forever holdings in portfolios. So I don't worry too much if they pull back on a bad earnings announcement.
So you're not worried about the potential for a big sell-off in the fall, or you're just not thinking either that long-term or short-term, depending on how you want to look at it?
Yeah, I think we're going to have a volatile couple of weeks up until about October. September tends to be a bad month for the market. So I guess I'm certainly just not worried about that volatility. I expect it. I expect to be buying on the dips, but longer term, again, I'm just a believer that the market is going to end up positive this year. And these are your opportunities to dollar cost average into a more diversified portfolio. But that last point, I am diversifying, right? So I have seen the small caps. I do think there's something there. I'm looking at names like MicroStrategy, for example. We saw the Nashville conference this weekend. America is going to be the land of Bitcoin if we, get that side of the house elected. So I do think there are some opportunities now to diversify as well, but I'm not afraid of the volatility in tech and that pulling back.